Ladies and gentlemen, welcome back to the channel. I hope you guys are having a fantastic day. AMC stock is coming off the highs today. You are trading at about 4% positive today. There's a big reason for this, and it has to do with treasuries. Treasury yields are falling, thus helping out your small mid-cap companies the most. Now, AMC stock is in a particular situation to be able to make a lot bigger move higher. We're going to get into kind of my expectations, what I expect, what all the data is today, and what you need to know as an AMC stock investor. So let's go ahead and get into it. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So the first thing I want to start with is this drop in 10-year treasury yields today is making the yield curve uninvert a little bit more. This is actually good news. As you can see from this chart, anytime you actually are inverted and then you uninvert, you break above this black line, which is 0. That's when you go on recession watch. So right now it looks like the recession is maybe not around the corner. It's hard to say. The yield curve can move a lot. But what's happened lately is your 10-year treasury yields are now dropping. Your 2-year are staying, the same. And that is creating this uninversion even steeper of the yield curve. This is actually what I would say a positive thing here on the day today. Now, if you look at treasury yields so far for the end of this day, you could see that you are up. Well, technically, the bonds are up. The treasury yields are down. You're down about 11.5 basis points. If you look at your indexes themselves, the Russell 2000 is really the big outperformer, up 2.72% here on the day. So it's no shocker to why AMC stock is also outperforming today. AMC tends to be a very interest rate sensitive company. They have a lot of debt. They need to refinance at some point, extend some maturities. So rates coming down like this really helps something like an AMC, and that is where you're getting some of this outperformance. Now, the other part of the outperformance is just simple. AMC stock is improving. You don't have a short thesis on AMC anymore. I mean, the only short thesis you could have on AMC is that rates stay higher for longer. AMC is unable to refinance debt, and they ultimately go bankrupt that way. But that is years potentially down the line. AMC can raise capital if they needed to raise capital. Now, I think it's pretty clear AMC is probably not going to raise capital anytime soon. And you can see that reflected in AMC's share price now at about $11 per share. You're kind of coiling here. This is what I kind of call coiling to the upside. You're finding a lot of demand in this range, but you're not getting enough demand to push the stock much higher. That's because you really don't have a catalyst as of right now. Besides bond yields falling, besides the things we're talking about here in this video, you don't have that big smoking gun, if you will, to send AMC stock higher. We need earnings. We need earnings to confirm that maybe earnings were better than some people thought. And I think that is ultimately what we're heading towards. And I think that's where we could see a much larger move higher, especially if AMC can get close to probability. Now, the EPS numbers look very strange now just because you have a lot less shares outstanding. So that EPS drawdown is going to look a lot worse. Like some of the other quarters we had seen, you were negative like 3 cents on EPS. That would be equivalent to negative 30 cents of EPS now. And what Wall Street is expecting, at least some people, is for an EPS number of around, let's go ahead, of around 44 cents negative. So that would be like 4.5 cents on your split adjusted EPS. It just looks a lot different now, and people are expecting revenue growth of 27%, and again, a loss per share of 44 cents. Now, if AMC can somehow maybe not lose 44 cents, maybe the loss is 30 cents, maybe the loss is 20 cents or 10 cents, that is going to be really, really good. Now, this Taylor Swift film is going to be another wild card. We don't exactly know how that is ultimately going to affect AMC numbers, if that's going to be substantial, something you can quantify, or if that is not going to be anything that's really going to make a difference. We still don't know that. We're kind of waiting to see that. Next week, you're going to get AMC earnings. That is going to be on November 8th. So that is on, let's see, Wednesday. You definitely want to mark your calendars for Wednesday. That's going to be a big day for AMC stock. We're going to get a lot more details, and AMC stock can now move a lot more freely because it doesn't have this court proceeding weighing over our head. We already know what happened there. We already got all of that bad news. So I think AMC stock can move a lot more. And I do think if you look at the short interest numbers over here on Ortex, you might be discouraged because it says like 6.38%. Those are not true numbers, in my personal opinion. I'm not a financial advisor. I'm not a financial planner. I'm not a financial analyst. I'm not your dad. I'm not your cousin, not your grandpa, not your uncle. So, don't listen to me, right? Long story short, don't listen to me. But I think it's pretty clear AMC short interest is likely a lot higher than 6.38%. I think this is a lot of trying to hide short positions, trying to cover up for them, is really what we're seeing right now. Now, I think the U.S. SEC rules, the new rule change to shine a light on some of the short activities that we have seen on stocks as of lately, the last couple of years. I think this is a big reason why some shorts are opting to, kind of hide their short positions. A lot of the time, if you have a short position and you go out and you buy some calls, you buy some puts, you can report that you've covered on short position, maybe because you're buying puts that are, deep in the money, or calls that are deep in the money. You can go report that you've actually covered your short position because you've hedged that short position, when in all reality, you have not actually covered that short position. We're going to get a lot more details on this situation with AMC, where the numbers actually look like here in the next coming weeks. I believe this does go into effect towards the end of November. So I will keep you guys posted. I'll need to find exactly when that is, but I believe it's the end of November that actually does go into effect. Now, if you take a look at the AI investor sentiment as well, this just updated on the 1st, so that would have been, Tuesday? And you could see 24.3% of investors are bullish, 25.4% are neutral, and 50.3% are bearish. You are almost at your 1-year high for bearish investors. So you almost have to be a buyer in this kind of market environment when so many people are bearish. And we've seen a big rise in yields as of recently. And even through all of that, AMC stock has done pretty well. It's basically just traded sideways, coiled, as I'm going to call it. And I think you're now primed for your break higher. Now, as you can see, if I pull this, put this line here on the chart, you're basically finding resistance at the same place you found resistance on October 12th. If you break out above that, that's going to be very exciting. Probably you're going to have to wait until next week, I would imagine. This line is sitting here at about $11 or so per share. You're at $10.95 per share, up 4.38%. You could break out above that by the end of the day today. That would be really good news. That sets you up for a run to that 100-day moving average, currently at about $24 per share. So that's why I think a bigger move is coming. I don't think this does any kind of justification or ratification to AMC, considering all of the good news we've seen, improvement to the business, and where you're just trading at. You're still trading at your lows of January 2021, when AMC is a much different, much better company than when it was being shut down due to the Rona, and ultimately a lot of people thought was going bankrupt. So I just don't think these levels are justified on just the simple kind of fundamental basis of the company and what has changed and what is different now. Now, you have seen a lot of bullish indicators start to flash as well. All of these green circles, there is a lot of good things going for AMC as of right now. And I just think you're in for a multi 100% rally. If you're counting the rally from the low at $7.05 per share, you're up like 60% since then. So congratulations to you guys that, maybe took that, what I said at the time, as an initiative to, try to make some money, try to make a trade. You're up like 60%. That's great. But I think a multi 100% rally is just that, a multi 100% rally. That takes you, at least in my opinion, to the 20s, if not potentially higher than that. And again, when you have so many shorts, when you have so much covering up of shorts and option activity, it's really hard to say how high you're going to go or even try to time when that move is going to happen. That's why all of this is very, very difficult. And if you do look at the volume for AMC, you're trading today, looks like about 16.7 million shares, which is kind of in line with what you have seen recently. Volume has kind of slowed down. Can't stop yawning. You could, you were seeing like 30 plus million shares trading hands back here in early October, and now you're at the mid-teens. So volume is down like 50% from where you were just like a month or so ago. And AMC stock is making some pretty big moves higher. So just imagine what happens when you get that kind of volume that comes back in AMC. You're going to see some very, very large moves with the stock. Now, the RSI is at 55.56, and the MACD is trying to go positive. The MACD line is negative 0.15. You are so close. And I think once you do break into positive on that MACD line, then you start to get a lot more momentum to the upside. The RSI looks pretty good. Still pretty neutral overall, but definitely trying to go higher here. And I could just see the next couple of days or the next week or two being very, very bullish for AMC. But ultimately, when you really want to be positioned in this stock is probably when the rate cuts come and when the markets start to price in rate cuts. You've seen a big drop in treasury yield, so to some degree, investors are kind of pricing in rate cuts for the next 10 years or so. Quite a few of them over the past couple of days, 2 to be specific. But once you actually get this pricing in rate cuts, the investing.com Fed rate monitor tool, once you get this pricing in rate cuts, like strong rate cuts, that's when you want to be even more bullish. Right now, markets are pricing in a 25.4% chance of a rate cut by March, and a 64% chance of a continued pause, only a 10.5% chance of a raise. So the statistics, the probabilities are starting to skew a lot more towards rate cuts over the next couple of Fed meetings. So that's something I'll be watching pretty closely, and I think that will have a positive impact on AMC stock as a whole. Now, the rest of this data, it looks pretty similar to what we said in the last video as well. Nothing's really changing all too much. Now, the option activity is definitely changing. You've seen 12 orders totaling $1.23 million with a positive order value of 53%. So you do have, more dollars heading into bullish trades for AMC than not, but it is pretty 50-50 here. And today, $1.23 million worth of option activity from hedge funds and institutions is a lot higher than actually what you've seen recently. Recently, you've been like $200,000, $300,000 worth of option trades on any given day. So do go ahead and keep that in mind, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.